Good evening, traders. It is Wednesday, December 11th in the evening, and it is time for the weekly swing trading video. So let's see what we've got in store for today's video. We've got a market that pulled back last week. We saw this pullback. We saw this bullish hammer. We were going to get some follow-through buying. That was the extent of the dip that we're going to get. There was a little concern that the U.S.-China trade talks were breaking down, reversed instantly, and then we floated back up to the high. So our positions did well. We highlighted bullish picks. There's no reason for us to be bearish in this environment. Everything is lining up. We had the FOMC statement today. It was benign. The Fed is going to stick with current policy unless we have a major economic decline. That's not in the cards. We've got a UK vote tomorrow. It looks like Boris Johnson is gaining traction. The margin of victory will be a little narrower than it looked a week ago, but he should gain support. England should have an orderly Brexit. That's good. It reduces market uncertainty. We've also got a USMCA trade deal. It is huge relative to a US-China trade truce. We do so much more trade with Canada and Mexico than we do with China. We do twice as much trade with Canada and Mexico as we do with Europe. So that USMCA, that was a really big deal, and I think it's being overshadowed. So I see that there's less uncertainty going into year end, and I don't really see anything that's going to spoil this rally. The new tariffs for China would go into effect on Sunday. I believe that if they can't reach an agreement, they're going to postpone the next round of tariffs. They'll keep everyone at the negotiating table. Investors will be pacified. Both markets will continue to tread water or move higher. And this whole US-China trade negotiation may even continue right up until the 2020 elections. I'm not expecting anything much to happen. Plus, this trade truce really doesn't mean anything. It just means kind of status quo. So, from a trading perspective, less market uncertainty. That's good. The market's able to tread water or move higher. That sets up well for bullish put spreads. That's what we've been doing the last 3 months. And man, has that strategy worked out well. You would think that with a rallying market like this, that call buying would be the way to go. Yes, you could have picked some longer term options on some stocks, but if you were anything inside of 2 months, you probably were going to lose money on time decay just because the market was moving higher, but it wasn't doing so very quickly. So selling out of the money bullish put spreads has been good, and it's still good. We're also able to distance ourselves from the action a little bit in the event that we do get a pullback. Now we've got another support level that we can lean on. So I went through the searches that I love to use, and as always, Pop Bull had a number of great candidates in it for either just getting long, but in this case we want to be selling out of the money bullish put spreads. Heavy buying was good, relative strength 30, strong after earnings. I looked through all these searches, found some really nice stocks. I'm only looking for a handful. Right now you should have a decent number of positions on. You should have probably a half position on in SPY. Market should continue to grind higher. You should have at least half of your bullish put spread allocation on right now. You can continue to add. I'm looking for decent news. Now here's the problem. We've got one more week, would be December 15th. This next video that I'm going to release on December 15th, after that, everything's going to really quiet down. Christmas is in 2 weeks. And typically, that week between Christmas and New Year's, also very, very slow. So we're going to see light volume. This is a good time to sell premium. Unfortunately, option implied volatility is at a 52-week low. We'll put up the VXX and you can see it's continuing to drop. So we need to have stocks that are down near major support levels. I'd like to see a little upward momentum, and we are looking for that upward momentum to follow through. If we have a stock that's just absolutely flat right now, and we try and sell out of the money credit spreads, We're going to have to go very, very close to the money to get the credit that we want, and any kind of market weakness could weigh on that stock. We want that little bit of uptrend in the stock right now. We really need that. We need it close to that technical support. So that's what I'm going to be looking at. And I've got a list already made up for us tonight. And we're just going to click through that. But before I do that, we got to review last week's picks. So let's review last week's picks and we'll take a look at them. December 4th, Autodesk. There's December 4th, right there. Yes, the stock is trading higher. We're selling bullish put spreads below this. Breakout right here after earnings. That's definitely a winner. ADVM. There is the 4th right there. This stock is a little bit lower. That uptrend line right there has still been preserved. The major moving averages are still intact. So this stock a little bit lower. Let's call it a small loser, if that. If you're selling premium on it, it's probably okay. It's still a decent trade to be in, but yeah, let's call it a small loser. AMRN. Love this. Man, this is one of my favorite ones to be selling an out of the money bullish put spread on. December 4th right here. We had a pullback the next day that set up really well. This uptrend line is what we want preserved. That was our stop. So I would continue to use that. And you just click here. Click here. There's your uptrend line. As long as that's preserved, stay in the trade. And that is definitely a moneymaker because that stock is higher. BBY, December 4 here. Absolutely, we're keying off of this level right here. Definitely a winner. Disney, December 4 right here. And we're right here. So a little bit lower. Time decay over the course of the week. Probably a break even. Let's call it a small loser. We're keying off of this support level right here, this horizontal support level, halfway up this long green bar. So let's call it a small loser, but I think that's probably a break even here because we've had a week of time decay. DKS, definitely a winner. Very nice. INSG, this is just a stock play. December 4th right here. You bet. That is a nice winner. It's at $7.50 now. It was somewhere around $6.50. It's a $1 winner on a $6 stock. Oh yeah. I've got a couple of low price stocks also for you today. I'm going to show you a search that I run in Option Stalker. And we're looking for momentum right now. We know that we have to go very close to the money to get a decent credit for some of our credit spreads. So that may not be a great strategy for all stocks. We don't want to buy premium because there's no market tailwind. So this is a good time to find some of these cheap stocks that are running. Take a position. They're really pretty nice for swing trading. Definitely good for day trading. So we'll take a look at some of those. MS. MS, we've got this December 4 right here. We're keying off of this support level right here. We like that bullish hammer right there. Yes, definitely higher. Definitely a winner. PDCO, that was December 4th. I love that it poked through this 200-day moving average. The next morning, the stock opened here. If you got on board with that, it went from $21 to about $23. Yes, very, very nice. Actually, up to $24. Really nice winner here. Starbucks. I love Starbucks here. I love it here. I love it here. Keying off of that 200-day moving average. We've got some options that should be expiring this Friday, and those are in great shape. Those are going to be expiring. When you get a stock like this, you can keep rewriting as long as it doesn't get too far from that moving average. And any little dip, I would sell some more Starbucks bullish put spreads. I love this bottoming formation. 1, 2, 3. Hugging that 200-day moving average. I think that one still sets up very well. So out of all of these, we had 8 definite winners, and we got a couple that are tiny losers, if at all. Good week. We'll go into the bearish list. The caveat to doing bearish trades was that the SPY would be below 310 support, and I encouraged you not to even look at the bearish side because we were going to keep bouncing. There's 310, there's December 4, never below 310. Should not have looked at either one of these bearish trades. And this week, you should not look at any of these bearish trades unless we get a pullback below that 310 level and a close below it. So, Oracle, December 4 right here, we're below the major moving average. No, you should not. If you did the trade here, you shouldn't have. And if you did get in the trade, you needed to stop out right here when it closed above the 100-day moving average. So, no, you shouldn't have been in this trade. We're looking for continuation and then to lean on those major moving averages if the market had fallen, and it did not. So, shouldn't have done that trade. VLO didn't do much of anything. Got December 4 right here. So it's basically flat when the market is trading higher. So you can see that the relative weakness continues. We'll do an SPY overlay. That'll make it even easier to see. Really good pick for a short. Market up, stock flat. That's what we want to see. So VLO probably would have made money with a week of time decay. So let's take a look at what we've got this week. Before I do that, I'd like to mention that if you are watching this swing trading video on YouTube, I post it 3 days after I record it. A lot of those trades will still be legitimate for the next week, but I want to give members a chance to get in the trade. If you'd like to get the weekly swing trading video, sign up for the day pass by clicking try it now or try it on our homepage, www.oneoption.com, and you'll be able to take our day pass and use all of our research. That includes the weekly swing trading video, it includes the daily day trading video, it includes the chat room, it includes my pre-market open comments, it includes all the market indicators that I have in the chat room, and 2 excellent day trading searches in there as well. Try it for a day, and you'll be able to also watch these videos and get a feel for our research. So enough promotion there. I'd like to go into this week's picks, and we're going to go into the December 11th bullish picks, and I'll show you why I like them. Baidu, B-I-D-U. Okay, so here's the good and the bad. We've got this gap right here. After earnings, stock goes up. It's been pulling back gradually, and you can see how the selling pressure is starting to subside and how this support level is becoming more and more defined. I like it. I think the stock's going to be able to find support here, and I think it's going to move higher. At very least, it should be able to just hover here. I would use the 112.50 as your key strike price for this bullish put spread. Again, we need to go close to the money to get a decent credit, and I like this horizontal support right here. Put on a GTC alert here. You can use that alert line as a guide. We need to maintain that support level right here. But I like it. I think it's going to be able to do that. If I zoom out, we can take a look at what the longer term chart looks like. Oh, this stock has been buried. But you can see how it's consolidating down in this level, gaining support very gradually. So I like BIDU. ETRN I'm going to skip because that's a stock pick. HOG, Harley Davidson. So here's what I like. You've got this downward sloping trend line. Stock has breached at that downward sloping trend line. We've got a couple of long green bars closing on their high. We also have this major moving average right here, and we have 1 test, 2 test, bullish hammer. These support levels are holding. Key off of that $36 support level. Stock's at $37.50. Not sure of what the premiums are here. You might have to go out to the December 20 expiration to get a decent credit for it, but I like that. I like that one. In fact, let's take a look at it and see what the premiums might be for it. I'm going to click Trade Options. Bring up HOG. We'll go into the December 20s. And let's take a look. So we're looking at that $36 strike price. I'm going to have to expand this. And let's see what we've got here. So December 20, we have the $36 strike price. You got 21 cents here by 29 cents. Pretty wide bid-ask spread. 15 by 21 here. So you can see just off the screen, off the bid, you've got a zero bid here offered at 14 cents. So you'd have to get a dime for this. I don't do anything unless I can make a 25% return or at least a 20% return based on the margin that I have to put up. If I have a 50-cent difference in the strike prices and I bring in a dime, that means that 50 cents less a dime is 40 cents. That's what I need to put up in margin. A dime divided by 40 cents, my maximum risk on that trade is a 25% return. So when I'm doing a 50-cent credit spread, I like to at least get a dime for it. Right here, I don't think you're going to be able to get a dime for it. You're going to need to have a little bit of a pullback. If you get a little bit of a pullback, I like that December 20 play right there. So perhaps I should do this on more of the trades, but it would take me a lot longer to get through all these picks. Here's one that I really like. I like Intel, and here's what I like about it technically. So you've got this cup and handle formation here. There's the cup, there's the handle, you have the lip right here, and you have a massive breakout right here. And you've got earnings after the close, boom, stock rallies up, pretty good momentum, and then it starts to top out a bit, and we start to see some profit taking. Where does the stock rest? It rests right here. So I'm going to click the GTC. We'll connect that candle, and we'll connect that candle. And you can see that is your stop out point. I like it. The stock is right here. It's getting ready to fill in this little gap right here. It's got strong support. It wants to move higher. So we're just looking for it to float right here. You can key off of that 55.50 support level. Let's take a look at that one. Why not? So I'm going to right click. I'll bring up the option chain and then we'll see what we've got going on there. You know, this recording software is always playing games with me, so it was interfering with my right click. I'm going to click on December 20th and we'll take a look at those 55.50s. And so we've got a 31 cent bid offered at 33. So right here off the screen, you can get 7 cents. You probably can squeeze 8 cents out of it. And this is a 50-cent wide credit spread. So 8 cents is a little bit less than I'd like. Try and get a dime for this. I really would like to try and get a dime on those December 20s. Then I think it's a really good trade. You should be able to. The stock's not flying right now. Take a look at the 5-minute chart. It chops around. You can see the stock moves. So don't go in and bang this thing out. Wait for it. See if it comes in a little bit. If it comes down and tests anywhere the middle of this range, probably around that 56.80 level, you're going to be able to get filled for a dime. I'm quite confident in it. So be patient with it. I like that one. That could be one of my favorite plays this week. P-Lab. Whoa. Hello. Look at that move today. Do the 5-minute on that. Zoom. Higher. It holds the bid the entire day. So here's how we want to approach this one. We don't want to chase anything. It's got to pull back a little bit, and it probably will do so in the next day or two. You want to get it to about that 1440 level. Halfway up this long green candle, that's where you want to be waiting for the stock to pull back to. And this open right here is at 1380. So probably going to have to sell the $14 put. Going to have to go a little bit closer than I'd like to, but I think this is going to be a good one. So we would key off of that $14 level. You can try the 1350s. Again, let's take a look at what these options are trading for. Right click, click trade options. We're going to go into the December 20s. And so we've only got the 1250s that we can lean on and the 15s. So they don't have strikes down at this point. And the stock is at 1513. So this turns into a stock trade. I would say just trade the stock. If it comes back in to the middle of this green bar, somewhere around the 1450 level, you want to try and buy that dip. I believe it's going to be able to hold this open right here and then take off and challenge the high. So PLAB is going to be a stock trade. Target. I like it. It gaps higher. It's able to come back and test that open. You see how well these opens hold? Now it's starting to move back higher again. I think you can key off that 122.50 level. That's where you would sell your bullish put spread. That's also your stop if the stock closes below it. I believe the stock's going to continue to grind higher into Christmas. Twitter. This one we sold a couple of weeks ago. These bullish put spreads should be expiring this week. You should be able to buy them back for a penny right now because they're well above that support level. And I still like selling right around this 29.50 support level. See if you can get another one done. We've already got at least one, maybe two bullish put spreads in the bank. I think you can sell another one. 1, 2, 3, 4. All support right in here. Rally up, another bullish hammer. We're seeing some support in here. Nice tails under body. Stock has been pummeled. I think this is going to be a decent one. You just want it to maintain this base, and who knows, perhaps it even starts to rally and tries to get into this gap. If it gets into the gap, then I like it even more. Then we've got another opportunity to sell around that $32 strike price. Final one, WDC. So we've got a downward sloping trend line, one test, two test, bullish hammer, nice support right in here. I think you can key off of this 47.50 level, 47 level. Nice strong support down here. You can see how it's trying to challenge that 200-day moving average. I believe the stock is probably going to poke through here and continue to rally. If it does, and you see nice long green candles stacking consecutively, then you can sell that bullish put spread using that 200-day moving average. I would prefer a little bit of a pullback tomorrow and to be able to try and get maybe a $48 bullish put spread done. Let's right click and see what those options are trading at. And we'll use the December 20s. I don't think we're going to get much of a credit on the December 13s right now, so I don't think those are going to yield much. So we'll go to the $48. You've got 31 by 35, so there's a 4-cent bid-ask spread right here. You've got 6 cents or 5 cents off the screen here. Probably could get 6 or 7 cents. We need to get 8 cents or better on that 48, 47.50 bullish put spread. But yes, I would like it down here. We've got a nice safe distance and we're really close to support at that time. So that would be my suggestion, is wait to see if you can get that 48, 47 bullish put spread, $48, 47.50 bullish put spread. See if you can get 8 cents for that. Let's take a look at the daily chart. And you can see it's got some movement intraday. It tends to be a pretty choppy stock. If I go to M15, there you can see a little bit more movement in it. So hold out. Don't chase. You've got the market going absolutely nowhere. This is a time when you can really sit back and let stocks come to you. So I am going to show you a couple of bearish trades. Again, I would not be doing any bearish trades, but I feel like I have to always include the other side. I want to make sure that everybody is in tune with how to find bearish trades, because there is going to come a point in time when the market conditions shift and you've got to be used to doing bearish trades. Don't do them now, but get used to looking for them. So here's what we're looking for. We got a couple of tops here, lower high, downward sloping trend line. We have another downward sloping trend line right here, tails above body. That shows that there's resistance every time the stock tries to rally, and now we've poked below the 200-day moving average. We've also come below horizontal support here at the $52 level. This is AIG. I think this would be a good bearish call spread candidate using that $52 strike price, long green candle closing on its low, and a follow through candle today. So yes, that would be one that I like to move lower. GME, GameStop, pretty nice. Stock starting to rally, comes back, establishes support here, tries to get through the 200-day moving average, earnings after the close, that's what the A stands for. Not a good reaction. You can see that it came down and almost tested that 100-day moving average, and it bounced off of it, and it held this support level right here, this horizontal support level. My suspicion is you're going to see continued selling in the stock. It's going to test the 100-day moving average, and it'll probably fail. So if it were to fail, I definitely will be looking at this for a day trading opportunity on the short side, but then it would also present an opportunity to sell a bearish call spread above that 100-day moving average and keying off of it. Now, I'm also not crazy about shorting $5 stocks, and I'm certainly not crazy about selling bearish call spreads at a $5 strike price. So I just don't like doing it on really, really cheap stocks. So I would probably use this as a day trade from the short side if it breaks that $5 support level. Speaking of cheap stocks, let me show you a search that you can run using option Stalker. So ADX measures trend strength, and on a D1 basis, I've got this configured so that it's going to find stocks with really strong momentum. Then you can come in here, click stock price, and you can use a value $1 to $10 and see what comes up. So these stocks all have great movement. I'm just going to click through some of these, and you're going to see some really nice movers. You can come in here, whether you're swing trading on a 1 or 2 day basis, great for day trading. So let's take a look at what we've got. Again, a lot of momentum in these babies. Downward sloping trend line, breakout above the 100-day moving average, breakout through horizontal resistance, rallies through, comes back and tests, bounces off of it, new high. Yes, this stock definitely wants to go, AKBA. But a choppy one. I like this one a little bit better because you have a very defined breakout through horizontal resistance, multiple horizontal resistance, big volume, long green candles closing on their high. This is AK Steel. I believe they are in a buyout with Cleveland Cliffs, CLF. Nothing going there. Not crazy about that one. Nice strong uptrend. Nothing particularly interesting to me. This is good. When you see long green candles closing on their high, so closes near the, well, actually it spiked way up, but opened lower, closed higher, boom, big volume. Yes, this is a pretty good looking one. I'd be watching this one for day trading. APTO is the symbol. Most of these are going to be biotech stocks. So this is nice. You've got horizontal resistance. Stock really gets going hard here. You get some profit taking that comes in, and then it gets right back on track, takes out that horizontal resistance. So pretty wild one, but definitely an upward sloping stock. And how do I manage this trade? I would click there. I would click there. That's your upward sloping trend line. As long as the stock stays above it, you stay in the trade. That's your stop. That allows you to ride it much higher. Just going to keep clicking through. That's a really strong stock. CMRE. Now I'm just going to click through. Downward sloping trend line. Really, really, really tight price action. And when these tight patterns like this are violated, you tend to get a pretty violent snapback because everything's been so orderly that the shorts have just been pounding, pounding, pounding this stock. And when it finally releases, you usually get a really nice release, perhaps up to that 100-day moving average. So yeah, this is a pretty nice one for short-term trading. And then I'm going to show you once again how to find these stocks. Nothing there. That looks pretty good. INSG, this is the stock from last week that still looks great. Love this breakout here, long green candles, big volume. I love that volume. Really, really love that volume. This is nice. I have no idea what this company is. It was $1 stock and now it's a $6 stock. Rallies up, profit taking, finds support here. Boom, buyers are right back on it, breaks through that horizontal resistance level, and then we're gone. So if you see this part of the formation, this is a bull flag. So you've got your rally up, there's your flagpole, stock pulls back, you've got this downward sloping trend line, and then it's breached on the upside, there's your breakout that you buy. And you can also buy it on this horizontal breakout right here. Really nice, ISEE. So these are just momentum plays. Really nice here too, JNCE. So when you're looking for trades and the market's doing absolutely nothing, this is a good search to use. SRNE. Very, very nice. Actually, I saw this one when it broke through these major moving averages. It was looking really, really good, especially after breaking this long-term downward sloping trend line. Love that stuff. I'm just going to put this back up. You can conduct the search yourself. So all you have to mark is stock price, $1 to $10, and also mark ADX very bullish. You can do your heavy volume searches with the same thing. So if I take this off, let's see who had heavy volume today. Look, these all may be really, really good prospects. So let's take a quick look. I'm going to go into bullish trade signal and I'm going to look for relative strength versus SPY. See if we can narrow this list a little bit. Yeah, look at that. I mean, let's click on them and see what we've got. Nah. Yeah, that's good. Double bottom here, that's good. Support there. You've got this downward sloping trend line that's been violated to the upside. Long green candles closing on their high. Yeah, absolutely. If you can get through $10, I think you've got a really nice stock to trade here. Only a couple more. Yeah, I like this. Long candles, above body, sign of resistance, 200-day moving average here. Stock gets through it on heavy volume. Yeah, I think this stock could go too. You'd like to see it close near the high. You want those long green candles closing near the high. So you got to be a little bit careful on that one. Wow. Yeah, definitely. That's nice. Breakout. You get the breakout here, runs a little bit, get ahead of itself, pulls back, profit taking. Buyers are right back in it and slingshots to a new high, heavy volume. So lots of searches that you can do to find cheap stocks. That's it for me tonight. I've given you some nice picks. There's the game plan. So we've got about another week of decent volume. That takes us to December 15th. When I do my video next week, boy, I think that we're really going to be looking for some more bullish put spreads, but really trying to minimize our activity and just kind of sit on our positions through year end, watch the market float higher, but know that volume is really, really going to be coming in. Don't expect a whole lot from Christmas to New Year's. Typically a very, very quiet period, but it's okay. Time decay. Generate income every week. Thank you. We'll see you tomorrow in the morning video.